government seems to have forgotten that the banks don't lend their own money to borrowers. They loan the money that their depositors have placed into their trust, or the money that they have borrowed from other banks, or the fiat money that the Fed has simply created for them out of thin air. So if the government plans to stop foreclosures, it will be taking money from the bank's depositors and creditors. Such takings are prohibited under the Fifth Amendment to the Constitution. When Minnesota banned all foreclosures in 1934, and the Supreme Court, in my view, unwisely and unconstitutionally upheld the ban, many folks just stopped paying their mortgages to banks that were in Minnesota. And many of those banks went out of business. Joining me now to talk about all this is Peter Schiff, president of Euro Pacific Capital and a candidate for the Republican nomination to the United States Senate from Connecticut. Peter, welcome back to Freedom Watch. What do banks loan? What is the source of the money that they loan to a typical borrower to buy a house?
Well, it's supposed to be depositors. Unfortunately, now a lot of the money is created out of thin air by the Federal Reserve. But, you know, first, your point about the Supreme Court in the 1930s, at least back then, somebody actually challenged it. The Supreme Court had to actually uphold it. Nobody would challenge it today. Whatever the federal government does, it's just taken for granted that it's constitutional because the Constitution no longer has any meaning.
At least back then, the Supreme Court was willing to take on the challenge, though they ruled incorrectly, in my view.
I know, but at least it was up for debate whether or not it was constitutional. Now it's a foregone conclusion. Whatever they want to do is constitutional.
It's one of the worst cases in American history because it basically says to the states, you can still uphold the debt. The borrower still owed the money to the bank, but you're changing the remedy by preventing the borrower from taking the security that was promised to guarantee the repayment of the debt.
And you know, if you wanted to do something to destroy what's left of the private mortgage market, this court case would be it, especially if it's upheld. I understand that the bank is appealing the case, but still it costs them a lot of money to go through the process.
You're talking about another case. You're talking about a case in Long Island last week in which a bank attempted to foreclose on a $500,000 loan on a $500,000 piece of property not far from where you and I are now. And the judge said to the bank, we want you to be compassionate with this guy, and we want you to renegotiate the terms of the loan. And the bank said, we've been compassionate with him as long as we can. We're entitled to our money back. And the judge got angry at the bank and said, you know what? I'm throwing out the debt. He now owns the house free and clear. Yeah. Obviously, this will be reversed by an appeals court. But what would be the effect if other judges did similar things each time a bank wanted to foreclose when a person stopped paying the mortgage?
Well, of course, it's chilling because nobody would want to lend money knowing that that's a risk that they face, that they might not get their money back because the guy might sue them and a judge might just decide that he wants to give this person a free house and you've lost your money. I mean, it's up to the bank. Look, these modifications, if the lenders feel that they could get more in foreclosure than through modification, then foreclosure should be their option. We shouldn't have to force modification on the lender who would prefer not to modify it. If modification is a better result for the lender, well, then fine.
There's no obligation to modify. When you say modify, you mean change the terms of the note so as to reduce the amount but lengthen the time of the payment to make it a little easier.
There are a lot of ways they can modify the loan, but generally, the reason a lender would want to modify the loan, let's assume that I've loaned somebody $500,000 to buy a house that's now only worth $300,000.
Right.
If I refuse to modify the loan and instead I foreclose, the most I'm going to get is the $300,000. So I'm going to take a hit. So maybe it might be in my better interest to modify the existing loan than to try to get a brand. But it should be up to the bank to make a decision.
Because there's no legal obligation in these notes to force the modification. It's just a business judgment by the bank.
Sure, and in many cases, modification makes sense. But if it doesn't, then foreclosure makes sense.
Now, if everybody could go to a judge who decides that where the bank doesn't want to modify to terms that are pleasing to the borrower, that the mortgage debt would be wiped out, then why would anybody bother paying their mortgage? Because they'd end up owning the house free and clear without having to pay the mortgage.
Well, of course, it's like winning the lottery. I mean, anybody who owns a mortgage is going to say, you know what, I'm going to do this because I'll take a shot. I'll stop paying. I'll try to modify. I'll claim foul, predatory lending, mean banker. Maybe I'll get my mortgage thrown out. It'll clog up the courts. But meanwhile, who in their right mind, knowing that this is the way you're treated, if you lend money to somebody to buy a house, who would want to do it?
Well, the banks would go out of business if they couldn't foreclose or if they didn't have the threat of foreclosure. Because without the threat of foreclosure, the same thing would happen to this bank, and I don't remember the name of it, as happened to the banks in Minnesota in 1934. After the Supreme Court in this case, called Home Building and Loan versus Blaisdell, said to the state of Minnesota, yeah, you can stop the foreclosures, people literally stopped making payments to banks.
That is the moral hazard that's inherent in this process. And whenever the politicians want to pretend that we want to help out the homeowners, we want to help them not repay their mortgages, what about all the people who loaned them the money? What about the depositors at the banks? What about people who own insurance policies where their insurance premiums have been invested in these mortgages? I mean, there is always a loser for every winner. And there are plenty of people who, they don't own property, they're renting property. The government is creating inflation to bail everybody out. There are huge losses that are being imposed on third parties in order to bail out irresponsible people that are in over their heads with homes they can't afford.
Switching gears, Ben Bernanke, the current chair of the Federal Reserve, will be subjected to reconfirmation hearings beginning very soon. In anticipation of those hearings, he published an op-ed in which he made statements about his view of what the Federal Reserve should be doing. One member of the Senate Banking Committee has come out against his reconfirmation, and that's the socialist Bernie Sanders from Vermont.
Because he's probably not socialist enough for Mr. Sanders' tastes.
Peter Schiff, president of Euro-Pacific Capital. What's the best argument against reconfirming Ben Bernanke?
Well, I mean, there are a lot of arguments against it. There's only one argument for it. We might get somebody even worse, which is kind of, it fathoms my imagination to figure out who would be worse than Ben Bernanke, because I think he's done a horrific job. And in fact, when I debated here in New York last week with a sitting FOMC member and a former member, and the minute I went after Bernanke, they were defending him like a fraternity brother, But I think he's done a terrible job, and I think his op-ed. I mean, I already wrote my own op-ed in opposition to his,
right,
which I've sent in. Hopefully they'll run it. But for him, the claim number one that he's against Ron Paul's audit the Fed bill on the grounds that it's going to compromise the Fed independence. What independence? It was compromised a long time ago. He's saying that if we pass this bill to audit the Fed, that the Fed is now going to have to make decisions for political reasons, monetary policy. Well, that's what they're doing. Right. It's already been highly political. And, Judge, also he says that, hey, don't hurt the Fed. We saved everybody. We're the ones that solved the financial crisis. He said, they didn't alleviate, they caused it. This is, he's just started a fire, and now he's claiming credit for putting it out.
Well, what is the short-term debt of the federal government right now? Is it about $2 trillion?
Well, it's way more than that. I mean, the national debt is, what, $13 trillion?
But
the majority of it is short-term.
Okay. How are they going to refinance a couple of trillion in debt short-term, meaning 3 months, 6 months, or a year? Who's going to loan them the money?
Well, they're in the same predicament Bernie Madoff was. They have to hope that the current holders of that debt roll it over. That nobody wants their money back. The minute anybody wants their money back, the party is over. And, of course, they also have to hope that we can keep interest rates this low. That's the same gamble that a lot of people made with their teaser rates on their subprime mortgages, that interest rates would never rise. And, of course, we know that's not true.
And if they can't roll it over and interest rates don't stay low, would they call Uncle Ben Bernanke to see what he could do to bail them out?
Well, it's either default or do that. Now, if the Fed is independent, like Bernanke claims it is, they would tell the government to pound sand, right? They would say, we're not. But does anybody think that the Federal Reserve is going to let the Treasury default on its debt? They don't have the spine to do that right now. Without all auditing them would make their lack of independence more transparent.
Peter Schiff, do you think that they are terrified? I do. Utterly terrified of an audit. Well, a real audit like the one that the House Financial Services Committee sent on to the full House 2 weeks ago.
I think they are terrified of it, but the question is, according to, I've heard Ron Paul speak here on this show, that they've already watered it down substantially so that even
the watered down one was thrown out. And the one that's actually going to the floor of the House is the one that Congressman Paul and your buddy Congressman Grayson, now called the Paul Grayson Act, rewrote themselves.
Well, then that's good. Although apparently Ron said he can't vote for it because they've loaded it up with all sorts of other stuff that he's against.
That's what they're going to do.
That's in typical, congressional fashion.
But the audit, the guts of the audit is there.
Well, that's good. Well, let's, but the thing is, will Obama veto it? Although he'd have to veto the entire bill then, right? So that's
cuts both ways.
Yeah. So
Peter Schiff, thanks for joining us on Freedom Watch.
Thanks for having me on again.